Welcome back to All Time High Golden Rule Radio. We're at the all-time highs with gold and just loving it here, guys. This last year has been really good. We're not going to hesitate to jump right into the chart of gold.
Yeah, Robert, it's been a couple pretty volatile weeks, I would say. Certainly not just politically, economically, we're seeing on TV, but in the precious metals. And I think the precious metals are responding accordingly. One thing I've said for years is news doesn't change or affect the direction of a market, but it does speed up or slow down the trend that it's already following. And we know the trend has been up in gold. And lo and behold, a fairly rocky couple weeks politically, and here we are, gold breaking into the highest prices ever.
Yeah, I got to be honest. I didn't expect it to happen that quickly. I've been telling clients by the end of the year, for all intents and purposes, with the foundations that were being laid, that it could happen potentially before the election, likely afterwards, depending on outcome. But all that to be said, better sooner than later. And it gives you the sense that we haven't really seen anything yet. I will throw caution out there to say, look, the three of us have been here for a long time, and we know what happens when gold gets a lot of attention, garners a lot of headlines, and quote unquote, they tend to like to knock it down. And will that happen? Who knows? But you've had a lot of short positions erased and reversed in the futures market to me, and we've got less restraint. The leash has been untethered in a sense, and I'm excited to see where it goes. I'm also excited to get a little bit of a breather here in silver.
Well, and it wasn't unreasonable when we saw how gold broke through those old highs. We brought up the fact that the last time we were here 10 years ago, the likelihood there's any standing orders there is very slim. On the side of the argument of a potential correction, I had brought up this massive, 6-month-old divergence that RSI was showing on the 4-hour charts, and we have broken above that and no longer in that divergent place. So this move up in gold is pretty legitimate, and the question now is, what is that next stepping stone price up to where we do see that first correction back down? So are we there now? You know, if I had to stretch my fibs out, I'd target us somewhere up around, let's say, 21 and a quarter would be my next step up point for gold, because that puts the 382 fib correction, the 50% line, that kind of lines those fib levels up where it would make sense that you'd see some price action for it to come back down to. But being that we broke through the old highs, there's no reason for it to immediately turn right back around. It could keep going another couple $100 and then take a breather from there if we end up seeing something like that at all.
I shared a chart that you put up a year ago calling this gold market breakout, and this is the summer of 2019.
Man, a lot's happened since then.
Yeah, and you talked last week about, you put up another great chart that showed how silver lagged a year, right?
Right.
Well, that same thing had happened in 2009, 10, and 11, where gold had broken out and silver lagged a year. So I would encourage every listener to go back and rewatch last week's show and just look at those charts. Well, you also put up a great chart saying, look, we're a couple percentage points away from the high. I'm not surprised in this week that we hit the all-time high. I'm surprised that we did it this summer, quite honestly. Once it started rolling, it just seemed like it was going to happen. But keep in mind, we're still 50% below the all-time high in silver and just a ton of upside potential. And we'll get into the ratio in just a bit.
Yeah, that ratio is pushed a lot lower, Tori. And speaking just with gold before we jump to silver, gold definitely has some legs here. Look at different times when gold has rallied in the summer, and I'm not sure gold's going to really give you too much of a breather. There was some interesting action first part of this week where gold pushed up to the 2,000 level and then got smacked down, bounced back up, smacked down. We kind of saw that in overnight trading, and that's interesting to note. You know, someone out there was taking profits at around 2,000, and obviously that's a psychological level, so we'll be watching it closely for this next week. What about silver?
So silver this week, after its big first higher high breakout, silver actually came all the way up to the previous bull market era floor. So if you look at the charts here between about the middle of 2011 up until we finally broke it at the beginning of 2013, silver had a pretty defined floor just under 27.5 that it kept bouncing off of. Well, we came in, we touched that floor, and we have turned around and come back down slightly. Although being that it's now Wednesday with a couple trading days left, it's very likely silver is going to close this week up as well. Another strong green candle, which arguably could mean we may see even higher silver prices next week, as parabolic as it's looked. On the shorter term, however, it does look like we're forming a bit of a doji candle, so we could see silver putting in a short-term top, but I just don't know if we're going to see that pullback off of this pricing. The charts say we certainly could. Personally, I'd rather see us up, let's say, around $33 to $34 on silver. I think that's a very solid place we could end up having a turnaround at that point. That's kind of your last right end shoulder of that previous bull market, right before things really started to decline, and we inevitably ended up breaking that floor I just mentioned. So if we can get a push up to about that pricing, then correction levels back down. That'd put the 382 fib where we're at right now at this breakout point. So $33 on silver. That's going to be my next high point target if we don't see a correction in the next few days.
Yeah, silver had a lot of the same price action that Robert was just describing with gold, and we're seeing most of that in the Asian market. So whether there's profit taking, there's certainly profit taking. I think you're right. I think also, however, a lot of that action is in the less manipulated Asian market, and then it opens in the West, it opens in London, opens in the United States, and that's when you're seeing the downturns. So as you stair step up here, I would strongly encourage you to buy the dips. Unlike the equities markets, I don't believe the equities markets pull back at this point. I'm not trusting a buy the dip type of mentality because we have a lot to work out over the next year. And starting tomorrow, quite honestly, as we start to see the biggest quarterly numbers from the second quarter come through. But silver, we got up to the $23 and pulled back a little bit, and then we got up to overnight about $26.75, pulled back here to the low 24s. These are opportunities where I agree with you, Miles. I think first we shoot to 28, and then again, if there's a pullback, that's another entry point for you if that's happened before we cross the 30 barrier.
So as we close out silver, let's definitely take a look at the gold-silver ratio chart, which is currently Wednesday afternoon, following on the heels of Jerome Powell's speech this afternoon, sitting at a roughly 81. Now, what's important is we did break below 80, so ultimately we've gone from about 125 on the way out of control high end down to about 78 this past week, and now we're sitting just above 81. Gold has made a bit of a push this Wednesday afternoon in response to the Fed announcement. But other than that, silver is still the buy. 80 sounds low after you were at 125, but looking over the last 40 years, 80 is a very good entry point for silver, and certainly still encouraging our clients to look at silver very aggressively.
When silver hit its all-time high in 2011, it started that run at around $17.50 an ounce in September of 2010. And by the time April of 2011 had rolled around, you're just, 6.5, 7 months into that parabolic move. We never did come down and touch 50-day or 200-day moving averages. And that's been a concern of mine, is when you overshoot so aggressively here and you disconnect from the moving averages, you kind of wonder, are we going to come back down and touch them? Well, it didn't during that period of time. I don't know if we're there right now or if we're in that first stage that took about a year and a half to build from the 2008 silver crash, when the equities markets crashed, to where silver finally did get back to that $17.50. That was more than a 100% move. Well, guess what we've seen here since the low in March? 105% move. So we're up 105% in silver from that low, and that's what's driven that ratio from 125 down to 80. And that was like a bonus ratio trade for us in a sense. And now you're going to have a similar type of opportunity moving forward. And again, is that going to take 6 months or is that going to take 2 years to play out? Interesting to see.
Right. Well, and speaking of that timing, we're a year into a gold breakout, and look what's happened. Gold from 1,400, let's say, effectively up to 2,000, or just shy of. Silver is a week into its breakout, so we're a year into gold, a week into silver, and Maya's silver certainly started to play catch-up. Platinum, on the other hand, is still in a bear market by all arguments from a chart perspective. So am I right? Is it still bearish platinum going forward?
Yeah, is platinum just lagging silver like silver lagged gold and ready to break out? Because, it's built this little base in the 900s and now popping up. So where does it have to get to turn bullish? Above 1,000 and change? Something like that, I think. I think it is likely that it could be doing that. While we were sitting there with silver in a bear market, we were saying that silver's about to turn bullish, and finally did. Obviously, gold led the way. Silver's now following. It's bullish. So maybe platinum's next, guys.
Hey, you got to have a dark horse. You got to have a favorite, the most undervalued. And let's let our silver positions run and continue to perform. But by all means, I'd say, tell us what those numbers are, Miles, but it's very attractive.
Yeah, I think platinum is very attractive. As Robert was mentioning, you have to at least get a higher high in so you can argue that you're starting to step up. Well, the last high we got was that January high of about 1,100. So at least well into the 1,000 and preferably up into the 11 or 1,200 range would arguably be where we want to start saying platinum has also begun its bull market run. Now, if you compare that to where silver's at, pushing against those 2011 to 2013 price lows, that puts platinum up around $1,400. And you compare it to where gold's at, that puts platinum another $1,500 higher than we're at now. Gold breaking into new high territory, that's platinum up at $2,500, $2,600. So silver's halfway there at $25 silver. It needs to get to $50. Gold is obviously already there, putting in higher prices. Platinum at $1,000 is less than halfway there. So in platinum going to a more average price against gold, let's say 1.3 to 1.5 times the price of gold, pick your top in gold, 3,200, 5,000, whatever number you've got in the back of your head. Then add another 50% on top of that if platinum ends up moving to that. So $5,000 gold, $7,500 platinum. I mean, I'm just making up numbers for the sake of math, but let's say we get there. That's obviously the play.
I agree, and don't forget, that's a double. That's a 100% increase in the platinum price would be sort of a conservative climb. We've already seen that in silver since March, and if we go back and touch that high, that will represent an over 300% increase in the silver price in whatever period of time. So let that investment work for you, and remember, its purchasing power of gold is what's increasing that whole time as that ratio shrinks. And that it takes big price action. So come on, platinum, catch up. Palladium, again, I would strongly recommend that you trim that position. If you still are holding on to some palladium, hasn't shown a whole lot of anything, has it, Miles? Been sort of in a sideways move, trying to break out, can't do it.
Well, we did have that nice move up in July, but that was coinciding with everything else, so you can't really argue that as being anything but just market
Not a higher
dynamics
high.
in general. Yeah. What we have done is we came into the right shoulder. Again, that kind of last attempt to continue the palladium bull market earlier this year in February and March. We had a right shoulder in March right before things fell off a cliff. So we hit that price here this week, and lo and behold, palladium has dropped a couple $100. So as platinum is continuing to go up, palladium is actually down this week, and therefore that's starting to tighten that ratio too.
That rounds out the metals, except do you want to talk about rhodium? No, we'll pass. We'll talk about the dollar. The dollar has been obviously going lower if you are paying attention to what's going on in the world. Slid past the previous low and is continuing down. It's had a little bitty bounce overnight this past night. I don't know if it's trying to stall there or just having a little bit of a bounce, but when we first started the show, we drew a line on the dollar index that hopefully Miles can pull back up, and it was a support line when the dollar was over 100. And it broke it and then fell, and then as it had a big rally back up, it's been respecting that line. Now, recently, it's not even been close to it because it's been holding up well above the line. But now as we're pushing lower into 93, it's coming back down towards that line. So I think it's just going to be fun to watch and see if it actually respects this trend line that we'll try to draw on the chart here. But anything technically with the dollar, anything you guys want to mention about the dollar index or dollar in general? I mean, we've obviously got the expected new stimulus package that's why the dollar is sliding lower ahead of the expectation. So maybe it's sell the rumor, buy the news instead of the other way around, because everybody's expecting the dollar to be inflated here with this new stimulus package. And so here we are with the dollar sliding higher. So once they announce it, is that where the dollar turns back up and has another trend back the other way towards the north?
Right. Anybody know how we're paying for the other stimulus packages? Oh, through more stimulus.
Yeah, that's right. Yeah, it's called a Ponzi scheme.
Right. Just keep borrowing from yourself, I guess. And as we continue to borrow from ourselves, Tori, you've been saying it for weeks, the dollar's going to the 80s at least, maybe lower.
Mm-hmm.
We're at 92, 93 now. Robert, I think one of the big things, and I love that this is kind of where this show started, right? Back in like 2017, looking at that dollar chart and saying, This was our big gamble,
It
you and
was.
me, the
That's right.
104. I thought we'd hit 104. We never did. And you had that fantastic declining floor on the dollar chart at that point, and that's why you didn't think we would see the dollar continue up. Lo and behold, like you said, we broke it in 2017. We've tried to come back up and retest those old highs in the dollars. We put in a substantially lower high here at the end of 2019, and here's where we are now. So we're just not seeing any strength long-term in the dollar. I think it's fair to argue that the dollar is now unquestionably in a bear market, probably going forward for the next number of years.
I do too, until you see that debt to GDP ratio that just skyrocketed towards 135%. It's got to remain weak. Some things that prop it up are even greater weaknesses in other currencies from the basket of currencies that make up the dollar index. And last week with the European Central Bank doing that $750 billion stimulus, those are the types of things that really have kept the dollar artificially propped up because it's a relative strength. And you've talked a lot about that on this show too. But yeah, I mean, we're going to see what this CARES Act 4.0 does. It's not a matter of how much they're going to spend. It's a matter of what sort of legal protections are there going to be in this bill for businesses in terms of being protected from employee lawsuits with COVID. That's the sticking point. Everybody's trying to outspend each other. There is no conservative spending habits in Washington right now from either side of the aisle. And on top of that, again, big numbers coming out the second half of this week. By the time the show comes out, we'll have more of those. Boeing's, for example, not pretty. But COVID-driven shutdowns are picking back up, and you've got massive unemployment. And you're going to have a GDP that's even worse than expected because I think a lot of those numbers were projected on optimism. And the reality is that you've got more businesses failing now, and you've got more pressure for distancing and crowd control and businesses shutting down. And to me, it bodes very poorly through the end of the year.
So speaking of businesses, I think it's only fair we move over and look at what the equities market is continuing to do. I don't think there's anybody out there looking at the general political economic news expects the equities market to take substantial steps up. I do want to point one thing out. We had a listener in our comments last week point out I had brought up the comparison between where the dollar was when the Dow hit its high, the dollar index, compared to where the dollar is now as the index was pushing to get back up to that high. And my argument was we've given up about 10% of the purchasing power of the dollar in exchange for pushing the equity price back up. So I had a listener point that out in regards to the relation of gold to where the dollar index was, and I thought that was a really good point. So I just wanted to show a quick chart on that as well. Looking back to the 2011 market high in gold at 19 and a quarter, so about where we are now, the US dollar index at that point was at 73. The price of gold, 19 and a quarter. Now the US dollar index, even though it looks like it's starting to slide down, it's still at 92. So we're still about 28% stronger in the US dollar, while gold is still getting up to this point. So same with the Dow. You know, when the Dow hit the high, the dollar was just under 100. Now it's down at 92. So my argument would be if we continue to see this dollar slide, not looking at gold as an investment, but just looking at gold as that mercury in the thermometer, as that counter to the purchasing power of the dollar, the idea of locking in today's purchasing power for tomorrow's prices. If we were to see the dollar slide down further, you can expect to see gold continue to push up. And that big inflation rate difference, obviously, let's say the dollar goes back to 73, well, that's going to push gold even higher at that point to whatever the next new high is. Again, is it 3,000? Is it 5,000? We don't know. So I think it is worth looking at not just in the short term what I brought up last week about the dollar versus Dow, but also looking long term over the last 10 years, just where the dollar was at that time that gold hit those old highs. In that era's value of the US dollar, gold was worth $1,925. Well, 10 years later, this is a different era. So the question is, where's the dollar going, and what does that ultimately push gold up to?
That's a really good point, because that's part of what caught me off guard with this week's high in gold. It happened so quickly without a drop in the dollar index to below 90. And that's what I thought would coincide, and it didn't need it. So you're right, it's pricing in future dollar weakness already. So where do we end up? Conservative Wall Street estimates have us between $2,300 and $2,500 gold within the year. And that's just mainstream media and big Wall Street firms predicting that. So maybe.
Yeah, if you jump with your dollar index to gold comparison there, I mean, us sitting here around 92, 93-ish on the dollar index, if we get down to the like 72, 73 number on the index, that's about 30% down. And add 30% onto the price of gold of where it is today, 1970 plus 30% is $2,500. So yeah, that's the direction gold's headed, and even add on to think about where silver's headed at that point, with the ratio still favoring to buy silver. So that does it this week for Golden Rule Radio. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, visit our website at mcilvaney.com, or give us a call at 800-525-9556.
Thanks for listening. Have a great week.